If you are thinking about moving to Florida, the real question is not just whether the weather is better. The real question is, what happens to your money? Because for some people, Florida can feel like a financial upgrade. For others, the numbers do not improve as much as they expect. So today, we are breaking down what actually changes financially when you move to Florida, and why the answer depends on three things: taxes, housing, and how much of your income is actually portable. Florida does not have an individual income tax. Its general state sales tax rate is 6%, and counties can add a discretionary surtax of 0.5 to 2% depending on location. That means your paycheck is not hit by state income tax, but your spending still gets taxed when you buy taxable goods and services. That is the first reason Florida feels different financially. If your income stays the same, but one of the biggest taxes disappears, your take-home pay can improve immediately. That does not mean Florida magically makes you richer. It means the same salary can go further, especially if you are moving from a state where income tax takes a bigger bite out of every paycheck. And that is where Florida becomes interesting, because the benefit is not just about making more money, it is about keeping more of what you already earn. Now let's talk about housing, because this is where the trade-off begins. According to the latest Census Quick Facts data, Florida's median gross rent is $1,669, and the median selected monthly owner cost with a mortgage is $1,959. Florida's median household income is $74,568. That means Florida is not a cheap state in the way people sometimes imagine. If you are coming in with a strong salary, Florida can still be a good move. But if your housing jumps too high, the savings from no state income tax can disappear fast. By my calculation, Florida's median gross rent is roughly 27% of the state's median household income, which is already close to the common housing comfort threshold people like to watch. That is why Florida can feel affordable for one person and tight for another, even in the same state. So what actually changes when you move there? First, your take-home pay may improve. If your job is remote, your business is portable, or your income does not depend on one location, Florida can increase your monthly cash flow simply because you are not paying state income tax. Second, your spending pattern changes. Florida still has sales tax, and in some counties, that means the final price you pay is higher than the sticker price. So even though you may keep more from your paycheck, you still need to budget carefully when you spend it. Third, your housing decision matters more than people think. A move to Florida only feels like a win if your housing choice stays reasonable. If you save on taxes but choose an expensive apartment, the advantage gets eaten up. If you save on taxes and keep housing under control, then the move can actually improve your financial life. That is the real trade-off. Florida works best for people who have portable income. That could mean remote workers, freelancers, sales professionals, business owners, or anyone whose salary does not depend on one local employer. For those people, Florida can be powerful because the tax savings are recurring. Every paycheck keeps more of its value. Every month gives you a little more breathing room. And that extra margin can be used for saving, investing, or reinvesting into the business. But here's the part people miss. A tax-friendly state is not automatically a budget-friendly lifestyle. If you move to Florida and your spending rises with your income, you may not feel much better financially. That is why the smartest move is not just chasing a lower tax bill, it is making sure your total monthly cost structure still makes sense. In other words, Florida can boost your income on paper, but the real win comes when your take-home pay rises and your lifestyle stays disciplined. That is when the move starts to matter. So here's the simple summary. Florida can improve your financial picture if your income is portable, your housing is reasonable, and you actually keep the savings instead of spending them right away. But if your rent climbs too high or your lifestyle inflates too quickly, the benefit becomes much smaller. So the question is not, is Florida cheap? The better question is, does Florida let me keep more of what I earn? Because for the right person, that is where the real financial boost happens. If you found this breakdown useful, comment below and tell me whether you would move to Florida for the tax advantage. And if you want the next video, I can break down the best affordable cities in Florida or compare Florida versus Texas for real take-home pay.